No, next up here, Celsius, for the people that want to know my opinion on those Celsius earnings this morning, right? Listen, I'm making a fortune on Celsius. In the public account, we're already at $45,000 on Celsius. And it's not like it's that old of an investment. This investment's only, a few months old now at this point in time? So we are absolutely crushing it in regards to Celsius. And congratulations to all Celsius shareholders out there. Wow, gains on gains on gains on gains. But let me be very clear. We've got a long runway of gains ahead of us here. And it's going to be very exciting. So here, this is inside the private stock group's Discord chat. I posted this, right? Once again, if you're looking to apply, join a private stock group, get access to all the course curriculums, Discord chat, pinned comment down there on this video here today. It's also linked in the description area. You can click on that, fill out a form. But I put this in the private group's Discord chat, right? I try to keep everybody up to date on all the different earnings that are going on out there, right? I said, alrighty, here's my take on Celsius's quarter. I said, one, this past quarter, not impressive whatsoever, right? Which no one was expecting this quarter to be, people are looking at it and like, this quarter wasn't good. Why is the stock up 5%, right? No one cares about this quarter they just reported. No one. And no one thought this was going to be some great quarter. I said, two, sounds like the core business is about to get back to growth, which is great news. Based upon what I'm seeing the management talk about, based upon what I'm seeing in the numbers, it looks like that core business of Celsius is going to get back to growth. It's just a question of, is it this next quarter they're about to report or the following quarter? That's really the only question. Is it in the next quarter or the second quarter up here, okay? So that's phenomenal. Third thing is, growth rates are going to skyrocket moving forward now that the Elon deal is done, right? So now all these future quarters are going to have the Elon numbers in there. So you're going to see growth rates skyrocket. And then if we're talking about the core business also simultaneously gets back to growth, dude, the numbers are about to go ridiculous for Celsius. Like ridiculous. 4, profitability should start to skyrocket at the end of this year. No question in my mind, as now that Elon deal is going to be behind the company, starting the back half of this year, we're going to look at, in my opinion, profitability that starts to skyrocket for the company. 5, international business is growing rapidly and it's very early days in regards to international expansion, right? And if you think about Celsius and Elon long term, like the biggest segment of their business should be international long term, right? It's not going to be this year, but if you think about 10 years from now, 15 years from now, the international business should be far bigger than what the business is today, right? In terms of the domestic business. So bullish overall, really good in regards to Celsius here, right? Additionally, I'm not sure if you guys follow me on X. That's always linked in the description area if you want to follow me on X and see all the posts I'm making in there. But I posted this on my X today. I said, Celsius will take off like a rocket ship this next 12 months. My 12-month price target on the stock is between $70 and $100. I asked everybody, does that seem about right? And you guys can always read through the comments there and, see what people's perspectives are, in regards to Celsius. But, I think the stock's set up for just a magical next 12 months. As people see the numbers, as people start to see the core business get back to growth, the international business in those numbers, and then the Elon business start to come through, I think people are going to get very, very excited about this business again. And then you got to understand, this year is really just all about revenue growth, right? Between the Elon deal coming through, getting the core business back. 2026, you know what that's going to be about? Margins and earnings per share. And so you got to understand this is going to be a very exciting next really couple years in regards to Celsius, because we're going to go from the focus is all on revenue and getting the revenues skyrocketing back up again for Celsius to then we go into next year and it's going to be about look at the margins, look at the earnings per share, and look at how fast those are accelerating. They're growing much faster than revenues. That's what we're going to be talking about at that particular time. So Celsius, man, I love this one, and this one sets up phenomenal, really regardless of how the market does. Celsius is going to run its own race for the next year or two. The market can go up, down, all around. Celsius is going to be running its own race now at this point in time. The story is too special to even, the market to even matter much in regards to that one, okay? That leads me to my next subject here. Earnings season. Now I would say we're about 60, 70% through earnings season, right? Listen, man, I'm feeling great. The reason I got Mr. Myers there is this was supposed to be such a scary earnings season. So much fear going into this earnings season is ridiculous, right? We were looking at a fear and greed index just a few weeks ago that was down at Rona levels. Oh my gosh, so scary. And here we are. We're getting all these company earnings, and the companies that are not really top tier companies aren't reporting that great of numbers. But you're looking at the companies that I really care about reporting great numbers and having great guidance and great conference calls. Companies like Meta, companies like Amazon, companies like AMD, right? They're coming through. They're putting up their numbers, and they're having great guidances. And, this was supposed to be so scary. The Trump tariffs, no one's recession, no one's going to buy anything anymore, blah, blah, blah. Really? It's not what I'm seeing in the numbers. Numbers look great. From all the companies that really matter the most, numbers look great. Like the only really big, huge, giant company I could think of in terms of market capitalization that had bad numbers was Tesla. Outside of them, who you got? Apple, even Apple. Apple's got nothing exciting in their business model right now. Not one product is exciting or hyped at Apple. Look at their numbers. Still really, really impressive. Revenue, earnings per share. This was supposed to be so scary. It was supposed to be a horror movie, right? And I'm out here saying, if this was a scary movie, it didn't turn out very scary, right? Incredible. Absolutely incredible. And here we are. We're already, 60% through. And honestly, we're already like 95% through all the super important companies that really shake the market up. The only one we got left is NVIDIA. And you know what NVIDIA is going to do? I'll tell you exactly what NVIDIA is going to do. Smash their numbers, and they're going to have a crazy guide. How do I know that? Well, I just listened to all the biggest tech companies in the world say they're going to spend at least as much as they thought they were going to spend, if not more. Doesn't take a genius to figure out NVIDIA is going to come through with great numbers. I just watched Jensen today on CNBC. He looked as confident as ever. So what do you got? What do you got? Not much, right? Now, I also want to share with you guys a couple things I posted in the breadcrumbs tab inside the Prep Stock Group because I thought that was relevant, right? Always trying to post different stuff in there. Sometimes stock market related, sometimes a little more like, just kind of money related in general. I said, there's two realistic ways to get rich or wealthy in this world, right? Financially. I said, one, make a crap ton of money and save it, right? Work super high up at a company, start your own business, make bank, something like that. Or get great investment returns over a 10, 20, 30 year span. List ends there. To have super rich parents and inherit a bunch of money or marry Jeff Bezos, not so realistic. Remember that, right? That's only two ways. The other ways is, not so realistic. So if you want to talk about the folks that actually get rich, wealthy, and are self-made, right? That's how they do it. That's how they do it, man. And so, you got to figure out where are you going to put your time in, where are you going to allocate time? Are you going to allocate time toward, if you have a very special ability to make a crap ton of money because you own your own business or you're working, at executive level at a company or you're working at that level, you got to put in the time toward that because that's a great opportunity for you. If it's more like, hey man, I don't have the potential to necessarily make $250,000, $500,000, $1 million a year, but I have a lot of ability to make $100,000 a year and get really good investment returns over time because you know everything to look for in stocks, you have the risk appetite, things like that, then you really need to focus a lot of your time and attention toward those investment returns, right? And make your 100K a year or 80K a year or whatever, and that's fine. And just focus on your investment returns, right? Additionally, I posted this, I said, my personal view on the good for life number, right? Because that's always was a debated thing, like what's the number that's like you're good for life, right? I said, in the US, it's $5 million plus now invested, in my opinion, right? I said, nowadays becoming a millionaire does not mean you're good for life with how expensive everything is. Like you're not going far on $1 million nowadays. Not in the United States of America. Maybe in India, maybe that's a different situation, right? Pakistan, okay. In America, you're not going far on $1 million nowadays. I said 50 years ago, getting $1 million meant you were good for life. Aim for $5 million invested long term. This is what everybody needs to be aiming for, when it comes to financial. You got to aim for that $5 million plus number, right? I said this is kind of how I would grade it, kind of my little pyramid here. If you have under $100,000 invested, you're just getting started. You're just getting started. If you got $100,000 to $500,000 invested, you're off to a good start. Good start. $500,000 to $1 million, you're doing well for yourself. Like, we'll give you a golf clap, right? $1 million to $5 million, you're rolling, you're working towards something. 5 million plus, now you're good for life. So, you got to really frame it from that perspective, and don't get too hyped because you're at, $80,000 invested. Like, cool, but you're still just getting started, right? You got a long way to go here.
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area.
HIMS. Oh my gosh. Look at the EPS beat. Q1 GAAP EPS of 20 cents. That beat by 8 cents. That is a monumental beat for earnings per share at HIMS. Incredibly impressive. Additionally, revenue was up a shocking 110% on a year-over-year basis. That beat by $47 million. Very nice number there. Subscribers grew to 2.4 million subscribers, up 38% on a year-over-year basis, right? Now, we do have something that's a little troubling here, okay? For the second quarter of 2025, the company expects revenue of 530 mil to 550 mil, so we can call it a midpoint of 540 mil. Consensus analyst estimates were at 564. So we're talking about a $24 million difference between the midpoint of what the company's expecting and where analysts are at. That's not good. If you're a higher valuation stock, you trade at higher trailing 12-month Ps and forward Ps and those sorts of things. You got to come in and beat, especially in this type of market where people are scared, right? Not ideal. Certainly not ideal for HIMS, right? Additionally, for the full year 2025, companies talking about revenue of 2.3 billion to 2.4 billion, so we call it a midpoint of 2.35 billion, right? And that's versus 2.32 was the consensus estimate. So we're talking about not much better than kind of where analysts are at here, right? And so for HIMS investors, a lot of HIMS investors, they're expecting this company to come in and knock out of the ballpark, right? They're expecting them to blow numbers out of the water when it comes to what analysts are expecting here. And so to come through with a guide that's lower and then a full year guide that's only very, very slightly above, what analysts are expecting on a midpoint, a little disappointing. So HIMS is like really good, and then it kind of get into it a little more, and it's like, dang, it's not quite as exciting as we thought, right? No, they said we're starting 2025 with incredible momentum. Millions of people are turning to us for access to care that is personal, affordable, and has the potential to drive better outcomes, said the co-founder and CEO. We're building a platform that puts the individual at the center of every decision, and others are taking notice. Over time, we expect wider collaboration across the industry, inclusive of pharmaceutical players, innovative leaders in diagnostic and preventive testing, and world-class providers. We believe this will strengthen our ecosystem and position us to curate a best-in-class offering that can reach tens of millions of people. You got to understand, HIMS, let me finish reading this and I'll get into that a little deeper, okay? This is a future of our platform, allowing a historically disjointed industry to reach more consumers for the benefit of those consumers, right? You're going to understand with HIMS, okay? Basically, they're laying out a future there that this is still very early days. Okay, 2.4 million customers. We're trying to grow to tens of millions of customers. You got to understand, HIMS, what it seems like to me, HIMS wants to become a new age Walgreens, CVS, right? If you think about what Walgreens and CVS represented for the previous generations, HIMS really wants to do that, but on a much higher level and a much deeper level, right? You think about Walgreens and CVS, brick and mortar stores, right? You think about HIMS, digital. They're not going to worry about building thousands and thousands of brick and mortar stores. You think about Walgreens, CVS, more just, you're getting your prescriptions there. HIMS wants to be even a deeper player in healthcare than just you're getting your prescriptions, right? And so what I see with HIMS is a very bright long-term future that there's no debating like that's the way things are moving, right? There's no debate at this point in time. And so HIMS is kind of in a sweet spot, and I think they'll continue to attract more and more customers, not just this year, but for honestly years and probably decades to go into the future, right? Now, if you look at their balance sheet's very impressive. $273 million in cash and cash equivalents, short-term investments of $48 million. That's a nice number, well over $300 million. What are we looking at? $325 million or so in cash and short-term investments. Additionally, if you look at total assets, just under $900 million versus $342 million in total liabilities. Impressive balance sheet at HIMS, right? Now, additionally, you look at the income statement, very good. I gave them an A- here. Very good numbers. Revenue went to $586 mil from $278. Impressive. Now, one trouble spot was cost of revenue. I thought that was worth mentioning. The cost of revenue did we can call it actually over 3x'd on a year-over-year basis. That is worth noticing, right? Because the revenue did not 3x on a year-over-year basis. Gross profit went to $430 million from $229. Gross margin percent did decrease to 73% from 82%. So that is something worth, noticing there. That's why, in some of these kind of numbers like this, like gross margin percent going on, that's why I didn't give them an A+. If it was just like everything was great, they would have gotten an A+ in this quarter. Marketing expense came out at $231 million. That was up over $100 million on a year-over-year basis there. And if you look at marketing expense as a percent of gross profit, we're talking it's over 50%. So it's a pretty hefty number. And it makes sense. Like every time I have on the dang TV, it doesn't matter if I'm watching a basketball game. It doesn't matter if I'm watching any other type of sporting event. If I got CNBC on, oh my gosh, the amount of HIMS commercials that play is ridiculous. And so I understand that they're spending a fortune on marketing because you watch TV for 10 minutes and you get 20 HIMS ads. It's insane, right? Operations and support, I thought this was impressive. They went to 63 mil from 38. Not a very big increase on a dollar amount basis when you consider how much revenue was up, right? Like up 100% plus there, that's impressive. Technology and development almost doubled on a year-over-year basis. G&A, general and administrative expense, they kept that in line. It was only up $14 million on a year-over-year basis when revenue was up, $290 million, something like that. Like, that's not bad. Not bad at all. So total operating expenses went to $372 million from $219. Income from operations went to $57 million from $9.9 million. Net income went to $49 million from $11 million. And diluted EPS went to 20 cents from 5 cents there. So really impressive income statement. Not an A+. There's some spots here you can point at, like gross margin percent going down 900 basis points on a year-over-year basis. But overall, still very, very impressive. That wasn't even the biggest news. None of that was the biggest news, in my opinion, in regards to HIMS. This was the biggest news. HIMS and Hers appoints Amazon veteran as Chief Operations Officer, the COO. COOs, some would make an argument that it's the most important position actually at a company. CEO, CEO is kind of just overlooking everything, right? They're trying to keep everything in balance and just make sure the ship's sailing in the right direction. But when you really break down a business, you can make a strong argument that the most important person, the one that's in the most day-to-day grind, is really the chief operating officer of a company, okay? So HIMS announced the appointment of Kabani as a chief operating officer. Kabani joins with nearly 20 years of global experience at Amazon. Kabani led Amazon's acquisition of PillPack, launched Amazon Pharmacy, and built key operations for Amazon Logistics, Kindle, Prime Video, and more, right? Phenomenal. I'll be honest with you guys. I think that was the biggest thing to come out in regards to HIMS today. By a mile. The numbers are cool, but at the end of the day, the numbers are, slightly better than expected, or the guide was slightly worse. It's not like that's making some monumental difference. This, folks, is, in my opinion, a huge differentiating factor for the company overall. I think this is really good news for them. And I've seen these Amazon folks, when they go to other companies, look what Carla's done with Honest. HNST, the small cap stock I own. I mean, Honest was a $1 stock. She comes in as CEO of that company, and now it's like a $4 stock that, $4 or $5 stock that I wouldn't be surprised is a $10 plus stock by the end of this year, right? And she's completely fundamentally changed the business, and she used to be a vice president, pretty important title at Amazon overall. So those Amazon folks, when they come in, they know what they're doing. Amazon didn't have all this success by just magic. They know what they're doing. And so I think this is honestly the reason that HIMS stock is not down more if you look at kind of the after hours action, because I think there's going to be a lot of optimism around this. Okay. Now, additionally, I looked at HIMS. Now, on face value, you look at the forward P and you're like, oh my gosh, it's a 63. That's 3x or so where the average stock in the market trades at. It's rich. Listen, when you consider the growth rates of HIMS and how much growth this company should have over the next 5, 10, 15 years, right? I actually don't consider this that expensive of a company, considering the stage that HIMS is at right now. So I look at a forward P in the 60s. I look at a 2-year forward P, let's call it in the 30s, maybe the 40s, depending upon where profitability. I don't think that's expensive, folks. And so, to be honest, like if you forced me to buy, if you forced me to either short HIMS stock or buy HIMS stock tomorrow, if I was forced to do one or the other, I would much rather go on the long side of HIMS, given where valuation is at and where this company's growth rates are going over the next many years, right?
Hey, it's Jeremy. I hope you really enjoyed that clip here today. Would you like the ability to understand how to do your own research and not just rely on others to tell you which stock to buy? Would you like to have confidence in yourself when it comes to making your own investment decisions out there? If you're going to be able to do that, you got to have full understanding of everything you need to look for in stocks, how you can decipher whether a stock is a buy, not a buy, all those sorts of things. That's where my private group comes in to help. The description area down there will have a link to apply to join my private group. We've taken over 1,000 people over time and been able to teach those folks exactly what to look for in companies, how to research companies, how to understand financial statements, understand all the different metrics so you can make judgments on companies. And we've been able to have so many people, an incredible amount of people, hit 6 figures plus in their portfolios, 7 figures plus, even some hitting 8 figures plus in their portfolios over time. So if you're looking to take your game up to the next level and play this on a much higher level, apply for my private group. Once again, the link is in the description area.
Now, next up here, what are some of the easiest stocks to buy right now, right? Easy money stocks. And then we'll get into how you need to really be focused in this market now at this point in time and kind of moving forward, okay? So I own several of these stocks in the public account, for instance, right? Meta's still easy money. I know I'm up, ridiculous, like $700,000 plus in the stock. If you factor in the after hours move, I've taken huge profits on Meta. At the end of the day, it's still buy. Like you look at the forward P of Meta, what are we at, a 20? Look at Meta just crushed EPS expectations, which means Meta's likely going to crush EPS expectations this entire year. So if you see, let's say, you go on 1000xstocks.com or whatever website, right, and you look at a forward P and let's say it says like 21 for Meta, right? If Meta's coming in crushing numbers, it's lower than 21. It might be 19, 18, 17, something like that, right? Which means lots of money to be made here, okay? When you got a company that's a double-digit strong grower, they just grew earnings per share 37%. 37%? And you're talking about a stock that the forward P in reality is probably under 20? Are you kidding me? You got me flipping my flapjacks. Give me free money. Like, what are we doing here? If you don't know Meta, I don't know what to tell you. You need to get on in Meta. It's easy peasy, lemon squeezy money, right? Amazon, easy money. Whatever happens tomorrow is whatever happens tomorrow. But Meta's a buy tomorrow. It'll be buy the next day. It'll be buy the next day. It'll be a buy the next day. Meta's been a buy every day for over 25 years. Every day. And I'm talking, it was even a buy in the peak of the tech bubble when the valuations were the most insane we've ever seen them in the history of the stock market. And Amazon was a buy then. And it was a buy as the stock crashed. And it was a buy in the great financial crisis and before the great financial crisis and after the great financial crisis. And it's been a buy for 25 plus straight years and it's still a buy. There will be a day someday when Amazon's not a buy anymore. When that day is, I don't know. It might be 5 years from now, 10 years from now, 20 years from now, 30 years from now. All I know is it's no time soon. Amazon's a buy today, easy money to be made over the next several years. Cheesecake, easy money to be made. You'd think about a company that just has the next 10 plus years of runway of growth. Cheesecake's got it. Great balance sheet, phenomenal income statement, growing. They're going to grow regardless. That's the thing with cake. They're going to grow regardless of what's happening in the economy, what's going on with Trump tariffs. It doesn't even matter. They're going to be putting up great numbers regardless. Tough consumer environment, great consumer environment, it doesn't matter. Cake's putting up their numbers regardless. They're top tier. Adobe, easy money. Listen, we just ran through it. These companies are starting to have a lot of their code now written by AI. Do you know how massive that is for a company like Adobe? That's a software company. Like, you think Adobe's margins are high now. Wait to see Adobe's margins in 3 years from now, 5 years from now, 7 years from now. You're going to see a whole new level unlocked in regards to that, right? Adobe's easy money here. Google McDougal, easy money here. AMD, not just easy money, but it's big money. And so I own a lot of these stocks that are like easy money. Now, there's other stocks I own that might be way bigger money-making opportunities, like an ELF, for instance. ELF's probably got a way bigger money-making opportunity over the next 3 years than let's say, a Meta or an Amazon, right? Because ELF probably triples, quadruples, or 5Xs over the next few years. Whereas, is Meta 3X and 5X over the next 3 years? Probably not. Is Meta 2Xing over the next 3 years? Probably, right? But there's a difference there, right? But ELF comes along with more risk than like a Meta or an Amazon, for instance. That's why everything balances out. We stay diversified, GVD, right? You look at somebody like a SoFi. Could SoFi be 2X, 3X, 4X the price in 3 years from now? Possible. Celsius, could Celsius 3X in the next 3 years? That's possible, right? So, I own a good amount of these easy money stocks that are just like, put me to sleep. They come in with great numbers quarter in, quarter out, just a question of how great are they. And then I own these other stocks that are kind of like a little more wild cards, a little more up and down their business models, but they have just insane opportunities for their stocks to rebound over the next 3 years. And those are stocks like ELF, stocks like SoFi, stocks like Celsius, stocks like that, right? So do keep that in mind. Now, you guys got to stay focused on the long term. I understand it's been so much short-term drama going on. I'm so happy people are finally getting to see the Trump stock market. This is what I talked about back on Inauguration Day, right? And I explained to everybody, the Trump stock market is going to be crazy. It's going to be lots of volatility. 1 minute people are going to be trying to find a bridge to jump off because, oh my gosh, it's the end, it's all the end. And next minute people are going to be trying to figure out, do they want to buy 2 Ferraris, 3 Ferraris, 4 Ferraris, 5? That's the Trump stock market. And that's the way it's going to be. And so there's going to be these time periods when people are just feeling like, it's a never-ending money-making opportunity. There's going to be these other times that people are going to feel like it's over. It's done. America's done. We're finished. We're cooked. Blah, blah, blah. And so that's what it's going to be. And I'm happy people are finally getting to see exactly what I was talking about. And so you got to stay focused on the long term here. Because the long term, these companies outlast presidents. That's the thing you got to understand, right? Like, Amazon, in its first run, that was under Bill Clinton. Bill Clinton. Then the second run was under George Bush. And then the third run was under Barack Obama. And then the fourth run was under Donald Trump. And then, what are we on, the sixth run, sixth run, was under Joseph Biden. And then its now next run is under Donald Trump. And so these presidents come and go. Republicans come and go. Democrats come and go. Your favorite blah, blah, blah comes and goes. But the companies remain. And that's what you got to stay focused on. The companies that are going to outlast the presidents and outlive the presidents. Because that's what does end up happening in the end, right? You look at almost every founder of a company. Every founder of a company, of a great, truly great company, the company should outlive them. Like, that's what should always happen. If it's a great company, like, the company's going to be stronger than ever the day they're getting buried 6 feet deep. That's the way it plays out. So you got to focus on the long term here. Don't get caught up in all the short-term stuff that's going on out there, guys. And a lot of people have done that, and they're costing themselves a fortune. And it's like, dude, there's so much money to be made out here. And there's only a select few that are actually making it, right? So, you guys got to take things up to a higher level. I think a lot of you guys need to join us in the private group. You can choose not to join us in there, but I'm just like, it's a huge mistake. Like, you got to get up to a higher level, get in those course curriculums, learn from me, see how I position my portfolio, multi-million-dollar portfolio that, I've been doing this game for 16 plus years now. I've been through several presidential cycles, several of these tariff dramas, like all this stuff, right? And let's go up to a higher level.